Howdy, everybody. Well, happy Friday. It is Friday, June, April 26, 2024. Welcome to the Liberty Call. I am Raymond Dahlman, your humble host. It is a day here in Colorado. It's a little cooler, overcast, not great. So I like the sun out. If it's going to be, cool breezes, I like to wear shorts out in the sun. So a little too chilly for shorts right now. So anyways, looks like the market's finished in a better mood today, basically across the globe. So who knows? I guess, maybe the people in the market are just in a better mood. I don't know. Anyways. All right. So we're going to go through today's the week's economic data, a couple of news articles, and cover what happened with the markets this week. And then we're out of here. So, all right. Well, if it is your first time watching Liberty Call, if you could do me a favor, if you could give me some thumbs up, a like, share, subscribe, follow, and press that notification bell. All righty. Let's jump over to the indexes for today and see how they turned out. God, these things. All right. Dow Jones was up 0.4%, 153 points, closed at 38,239. The S&P 500 up 0.97%, closed at 5097. NASDAQ up 2.03%. Big jump today, closed at 15,927. The VIX down 1.82%. It's at 1509. Canada up 0.38%. Brazil up 1.56%. And Mexico up 1.35%. Over in Europe, more of the same good news. Germany was up 1.39%. The UK up 0.75%. France up 0.89%. Netherlands up 1.42%. Spain up 1.56%. Italy up 0.91%. Switzerland up 0.74%. And Portugal up 1.07%. Russian exchanges both green today. MOEX up 0.36%. The RTSI up 0.83%. And the Asian markets, starting out with the Nikkei, it was up 0.84%. Australia up 1.39%. Australia down 1.39%. New Zealand down 1.01%. In China, the Shanghai was up 1.17%. Shenzhen Component up 2.15%. China A50 up 1.25%. TJ Shanghai up 1.43%. Hang Seng up 2.12%. And the Taiwan weighted up 1.32%. All right. So like I said, lots of green on the screen today. So not sure why. I mean, personally, I think the economy has to go through a massive downturn before we're ready for any long-term steady growth. But we shall see. All righty, let's go over to the weekly chart and see how things turned out for the week. It looks like the Dow Jones is going to finish off up about 0.49%. The S&P 500 up 2.34%. The NASDAQ up about 3.53%. Wow, that's a big jump there. The Dow Utilities going to finish the week off up about 1% even. And the transports looks like it's fairly flat, only up 0.17. So of the major indexes, it's Dow, S&P 500, and then Dow, S&P 500, and then the NASDAQ. So, all righty. So even with some of those really terrible days, the week didn't turn out too bad. So, all right, let's move over to the economic data for this week. Start now with jobless claims. We came in at 207,000. Forecast was 214. Last week's number was 212. Continuing claims came in at 1.781 million. Forecast was 1.814 million. Last week's number was 1.796. The S&P Global Composite Purchasing Managers Index came in at 50.9. Previous number was a 52.1. Basically, the way this index works is anything above 50 is growth, anything below 50 is contraction. So we're kind of right on the edge of, contraction or basically just kind of a flat line right now. So new home sales grew by 693,000 as of this most recent report. Forecast was 668. Last month's number was 637. New home sales month over month grew at an 8.8% rate. Last month's was a 5.1% contraction. Durable goods orders month over month grew at 2.6%. Forecast was 2.5, and last month's number was a 0.7. Gross domestic product, the first print came out this week. GDP came in for the quarter at 1.6%. For Q1, forecast was 2.5. So the prognosticators were spectacularly wrong again. I know, shocking. And obviously, fourth quarter of last year was 3.4%. So that's where that stands. U.S. pending home sales index came in at 78.2. Previous number was 75.6. And pending home sales month over month grew at a 3.4% rate. Forecast was 0.3, so huge difference there. Last month's number was a 1.6. Personal income month over month grew by 0.5%, right on forecast. Last month's number was a 0.3. And personal spending grew at 0.8%. Forecast was 0.6. Last month's number was also a 0.8. So if you look at that, spending grew by 0.8. Income only grew by 0.5. So you lost 0.3% there in that number. So is there anything less? And the last but not least, the Michigan consumer sentiment came in at 77.2. Forecast was 77.8. Last month's number was a 79.4. So yeah, really most of this year since the February number has just kind of been back and forth just below 80. So we'll see. I mean, when the sentiment gets down into the 60s and 50s, then we're probably in some real trouble. So, all right. So that is all the economic data this week. You feel smarter? I know I do. I mean, granted, I've covered this all week, so it's just more of a recap for me, but all righty. Oops, I forgot to do something here while we, let me kill a little time while I pull some stuff here. Oops, where's that? There it is. Hang on. Forgot to copy. Forgot to move my summaries over so that I knew what the hell I was talking about. So it's going to take a second here while I copy and paste. So I apologize. Because I got some good articles here I want to cover. All right. Where are we? There we go. Oops. Copy. Paste. My phone's ringing. Man, everything. It's just... You would think I would have been prepared for this, but I wasn't. There we are. All righty. Well, let's go ahead and, while that is, well, it's almost finished. Copy. Paste. All right. Now I got my notes here. I apologize. I should have been more prepared. That off the screen and get back to there we are. Let's bring up the, where are we? Oops. Let's bring up the article. All right. Market recap, U.S. stocks in rally mode as Microsoft and Alphabet impress on the earnings stage. All righty. The S&P 500 experienced a significant surge on Friday, driven by robust earnings reports from tech giants Microsoft and Alphabet. Let's see here. Google parent Alphabet saw a remarkable 10% increase, reaching new record high following its stronger than expected first quarter earnings announcement. This success was attributed to substantial demand for its AI offerings. Alphabet also declared its inaugural dividend of 20 cents per share. Analysts at RBC noted that Google is effectively navigating concerns related to Gen AI, positioning its stock as a core holding for investors. Meanwhile, Microsoft shares rose by over 2% due to robust demand for its AI products, contributing to stronger than expected first quarter earnings. Analysts at Macquarie reaffirmed Microsoft as their top Gen AI pick, highlighting strong performance from key growth drivers like Azure and gaming. In contrast, Intel Corporation stumbled more than 9% after projecting weaker guidance for the second quarter. This development raised concerns that Intel might fall further behind its competitors in leveraging artificial intelligence. Additionally, Snap stock surged nearly 30% following better than expected first quarter earnings and a positive outlook. However, Roku experienced an 8% decline due to the challenging year-over-year growth comparisons following past price increases. ExxonMobil rose by more than 3% despite reporting first quarter results that fell short of estimates, attributed to declining refining margins and natural gas prices. Overall, the market response was largely positive, fueled by the strong tech sector performance driven by AI capabilities. These developments underscored a mix of notable successes and challenges within the tech and energy sectors, influencing investor sentiment during Friday's trading session. Good stuff, I know. All right, one last article. It's kind of pessimistic, but is what it is. I feel it's important to share. It comes from Zero Hedge. Why are so many Americans that can't find a job, even though they are desperate to be hired? The article by Michael Snyder highlights the stark contrast between official economic statistics and the reality faced by many Americans struggling to find work. Despite government claims of low unemployment rates and abundant job opportunities, numerous individuals are experiencing prolonged unemployment despite their persistent efforts. Snyder shares poignant emails from readers who have been unable to secure employment after months of searching. One reader, a former custodial foreman laid off in September of last year, expressed frustration after applying for over 300 jobs without success. Similarly, a pharmacist in Seattle applied for approximately 300 positions without significant response, reflecting a troubling trend of skilled workers encountering difficulties in the job market, which my wife worked in the pharmaceutical business on the staffing and scheduling side for, about a decade. And, they were hiring pharmacists like crazy just to sit on the phone and answer questions. Not, normally when you think of pharmacists, you think at the hospital or at Walgreens, the guy in the white coat, he puts the pills in the bottle, answers any questions for you. But there's an entire business of pharmacists who just sit on call centers and answer questions, which like they did at Medco. So, but and that is that's a well-paying job. You have a pharmacy degree. It's basically like a doctor, just over medications, and it pays well. So it is a little surprising that it's a field that it's hard to fill because it's not very sexy. People want to be brain surgeons or some sort of a fancy doctor. They don't really care about being someone who puts pills in a bottle. All right, jumping back in, the situation extends beyond blue-collar roles, even as graduates from prestigious business schools are facing challenges. Notably, a substantial percentage of recent MBA graduates from top institutions remain jobless months after graduation, defying the narrative of a robust economy with low employment. I know how I would look at it as a, small business owner. If I was bringing on someone, I wouldn't bring some kid fresh out of college because they're probably woke and they don't have any real life experience. So I'd probably hire someone who just has, 10 or 15 years of job experience. I could teach them how to do this job. It's not too difficult. All right. Snyder argues that official unemployment figures are misleading, with over 106 million Americans classified as not in the labor force or unemployed, despite only 6.4 million officially categorized as unemployed by the Biden administration. So that's a big difference. He attributes this discrepancy to mass layoffs across various industries, exemplified by Tesla's recent notification of job cuts affecting thousands of workers in California and Texas. Furthermore, economic indicators suggest a loss of momentum in the U.S. economy, with declines in business activity and rising costs contributing to a worsening cost of living crisis. Snyder warns of impending economic challenges exacerbated by global conflicts, forecasting a scenario of escalating inflation and economic stagnation. We call that stagflation in this business. Overall, the article paints a grim picture of economic reality, questioning the sustainability of official narratives and underscoring widespread challenges faced by individuals and the broader society. So, like I said, is it terrible right now? No. Could it be better? Absolutely. We could have no inflation, which if we hadn't printed all that money 4 summers ago, we wouldn't be dealing with. Yeah, we probably would have gone through a market downturn. The economy probably would have, gone down the toilet for a while, but it rebounds. It's the government and financial interventions that usually cause all the problems down the road. And that's what we're dealing with right now. Similar to back in the 60s and early 70s with all the government spending, on the Vietnam War. That's what led to the stagflation of the 70s. And, it took a lot of belt tightening and reduce spending at the government level, which, that didn't last very long. But during the 80s, we got things back under control, and the 90s were pretty smooth. So we'll see what happens. Is it going to be a complete collapse? Are we just going to, slog along for another decade like this? I personally hope not. I'd rather go. I'm the kind of person, you pull the Band-Aid off. I'd just rather, rip the hair out and deal with it, deal with the pain right now, as opposed to a lot of pain down the road, which again, I've asked clients this multiple times. Would you rather have the stimulus checks or no inflation today? And most of them have said, I'd rather not have the inflation and all the problems we're dealing with today, and have gone through a little bit of a rough spell 2 or 3 years ago. So anyway, all right. Well, that's everything I have for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information is there. I hope you have a wonderful weekend. I shall talk to you next time. Adios. There we go.